Bismillahirrahmanirrahim. Assalamu alaikum and a very good afternoon. Ms. Jeniffer Schwalbenberg, Head of Corporate Responsibility of DDGI Limited. Yang berbahagia Datuk Noripah Kamso, Chairman of Bank Rakyat. Yang berbahagia Datuk Rosman Muhammad, Acting Managing Director of Bank Rakyat. The Board of Directors of Bank Rakyat, the Sharia Committee, the Board of Trustees of Yayasan Bank Rakyat, the Management Committee, the Sustainability Enabler Group, ladies and gentlemen. Welcome to the monthly Building a Shared Future series, where we invite internationally recognized experts to share their experiences and insights on various topics related to sustainability for the benefit of our staff, partners, and the wider community. It is one of the many initiatives the bank has taken on in its renewed identity as the Sustainable Bank. Just for your information, our talk today is live on Facebook, so if you would like to fetch some key points, you may go to My Bank Rakyat at our Facebook fan page. In one of our past sessions, we had Ms. Swazo who spoke about gender equality in the workforce. Speaking of gender equality, today we have a female speaker. We thank you, Ms. Jeniffer Schwalbenberg, for your time to be with us. We also apologize. We're supposed to have Ms. Stella Cox today. However, she is unwell and could not be present. Distinguished guests, ladies and gentlemen, however, before we begin, let us grace today's talk with the Recital of Doha by Ustaz Abdul Hakim Abdul Rahman.
Bismillahirrahmanirrahim. Alhamdulillahi Rabbil Alameen. والصلاة والسلام على أشرف الأنبياء والمرسلين سيدنا محمد وعلى آله وصحبه أجمعين. اللهم لك الحمد كله ولك الشكر كله وإليك يرجع الأمر كله. لك الحمد حتى ترضى ولك الحمد إذا رضيت ولك الحمد بعد الرضا. اللهم إنا نستحفظك ونستودعك ديننا وإيماننا وأنفسنا وأموالنا وأهلنا وأولادنا ومعاملنا وشركتنا وكل شيء أعطيتنا. اللهم جملنا بالعافية والسلامة وحققنا بالتقوى والاستقامة وأعذنا من موجبات الندامة في الحال والمآل إنك سميع الدعاء. O Allah, we beg you of all good things which pertains to this day and days hereafter, and seek your protection from all evil which pertains to this day and days hereafter. Allahumma inna nas'aluka min al-khair kullihi ajilihi wa ajilihi ma alimna minhu wa ma lam na'lam. ونعوذ بك من الشر كله عاجله وآجله ما علمنا منه وما لم نعلم. اللهم أنزل الرحمة والسلامة والربحة على شركتنا واجعل اللهم لها آمنة مطمئنة ناجحة رقية دائمة أبدا. O Allah, you are peace, and all peace is from you, and all peace returns to you, O Master of Power and Glory. In conjunction of the Building a Shared Future Series 2020, guide us among those whom you guide. Grant us health and pardon among those whom you grant health and pardon. Fulfill our wish and objective that this event accomplishes success and excellency for us, both on world and hereafter. Allahumma ja'al jam'ana hadha jam'an marhuma wa tafarruqana min ba'dihi tafarruqan ma'suma wa la taj'al Allahumma fina wa la ma'ana wa la man yatba'una shaqiyan wa la matrudan wa la mahruma. Rabbana atina fid dunya hasanah wa fil akhirati hasanatan wa qina 'adzaban nar. وصلى الله على خير خلقه سيدنا محمد وعلى آله وصحبه أجمعين والحمد لله رب العالمين. تقبل الله منا ومنكم.
Thank you, Ustaz. Before we pass over to Ms. Jeniffer Schwalbenberg, a brief introduction of DDGI Limited. DDGI Limited is the direct investment and strategic partnerships subsidiary arm of DDCAP Group. It is headquartered in London, and it performs as a market intermediary and financial technology solutions provider to the global Islamic financial market. It was established in 1998, and since then has won awards in facilitation services to institutional clients. It has worked with conventional and Islamic banks and facilitates to over 300 financial sector clients worldwide across a diverse range of Sharia-compliant products, asset classes, and instruments in both the primary and secondary markets. Its international footprint includes representative offices in the Dubai International Financial Center and in Kuala Lumpur. Presenting today on a topic, the impact of sustainability on Islamic finance, please welcome to the stage Ms. Jeniffer Schwalbenberg.
Good afternoon, and thank you very much. Thank you to Datuk Nuriba and to Bank Rakyat community for welcoming and inviting us. My sincerest Stella Cox, the Managing Director of DDCAP, is supposed to be here today, but unfortunately has fallen quite ill on her way to Malaysia and cannot make it. So thank you very much for welcoming me instead. It is with great pleasure and with great privilege that I get to work with Stella on what we call our Sustainable and Responsible Actions Committee as our head of corporate responsibility. So thank you very much for the opportunity to speak today. This is a brief biography of Stella. And Stella has worked in the financial marketplace for more than 30 years, and since 1998, she's been managing director of DDCAP. And under her leadership, she has pioneered Sharia-compliant intermediation services, bringing automation in the industry, as well as increased governance and sustainability. As we had the lovely introduction, which I thank you very much for, DDCAP Group is headquartered in London. We have a representative office in Kuala Lumpur. Thank you very much. Stella's a bit taller than I am. And a representative office in the DIFC in the UAE. We are composed of 3 entities: DDCo Limited, which is our trading entity, DDGI Limited, which is the direct investment for strategic partnerships, and Ethos, which is our asset facilitation platform. DDCAP principal shareholder is IPGL and the DDCAP management themselves. There are 40 professionals focused on Sharia-compliant financial services in KL, Dubai, and in London. Our executive management team has over a century of combined experience, and we have our own supervisory board with 5 members, including Dr. Laldin in Malaysia. IPGL is DDCAP's majority shareholder. It was a significant shareholder in the Next Group, and prior to that in ICAP. On November 2nd, 2018, CME Group completed the acquisition of Nex. And Nex is a global markets company and a world-leading provider of platforms, tools, and experience to enable companies to execute trades efficiently. I'll get the hang of this. Yeah, thank you. DDCAP's group's clients comprise central banks and the regulatory authorities, government institutions, Islamic banks, conventional banks, fund managers, and corporates across the globe. DDCAP has been the recipient of many awards and honors, most recently the Best FinTech Company in 2019, Best Interbroker for Islamic Transactions, the Market Leadership Award, and Best Islamic Finance Technology Product in 2019 for Ethos. So our Sharia Supervisory Board was formed in March 2013, and it was helped to promote governance in the industry. and began to overview all of the business transactions. And they convened the IOSA process and issued a fatwa over the processes and procedures, and it reconvened in September 2016 under a rebranded Ethos platform. To provide further assurance, because DDCAP is always strive to be a first mover and best practice. So to provide further reassurance about Ethos, not only does it go under review from our Sharia Supervisory Board, but it also undergoes the ISRS 400 review and takes an independent auditor to review processes and procedures as well as the documentation on board. It's taking both, so to commit both to a higher level of governance, both at the Sharia level as well as conventional governance standards. Where am I? Okay, thank you. So this is just to show, this is the branding for Ethos, which is the asset facilitation platform that is DDCAP's own. Great, okay, now we've got this. Thanks. The impact and sustainability in Islamic finance. There's a growing consensus that the objective of generating profit and doing good in whatever form, whether it's tackling environmental concerns, poverty alleviation, humanitarian crisis management, or resourcing healthcare, are not mutually exclusive and can be achieved in tandem. The many principles of Islamic financing and investment are complementary to sustainable investing, and creating both financial systems and applications that are more responsible to the real economy and provide a real holistic approach for all stakeholders. Mirroring the growing demand for conventional investments in green assets, there is similar demand coming for the Islamic finance marketplace. And this small to date, but undoubtedly growing rapidly with high-profile capital markets issuances from governments, institutions, and corporates, and various national initiatives for banking and investment practices. The green bond sukuk nexus. A green bond is one that commits resources to the proceeds of environmentally conscious investments. A green sukuk can therefore be issued for a similar purpose. Like green bonds, sukuk are gaining further momentum, driven not only by investors, but also by issues seeking alternative sources of financing, for example, by energy-related infrastructure projects. From a structuring perspective, a green sukuk is essentially no different to a conventional sukuk on an asset-based or an asset-backed structure, and will be further defined to accommodate ESG guidelines, as well as Sharia stipulation. How we produce and validate those guidelines is currently a matter of industry debate. Our industry is seeking an endpoint with wider SRI community, but there have been challenges in assessing where we can combine values, disciplines, and governance codes to best effect. If we are to extend Sharia-compliant green issuance, we might expect to engage with global standard setting and best practice organizations, as well as our internally industry infrastructure, bodies, and summonses with national authorities and regulators. Now, ICMA, the International Capital Market Association's green bond principles, have provided issuers with a voluntary framework since 2014 and have achieved best practice status. The GDP are voluntary guidelines recommending transparency and disclosure, promotion of integrity by clarifying approach to issuance. The conversion of a diverse set of issuers whose goals are aligned with risk and reward appetite of an equally diverse set of investors has established a reference point for innovative approaches addressing social and environmental funding gaps. Issuers are also guidance on credibility, investors on evaluating impact, and underwriters are supported in moving the market towards standard disclosures. Following on from the GBP, in 2017, ICMA launched the social bonds principles, which apply the use of proceeds concepts to bonds that are projects delivering social impact. The GDP and the SPB define both green and social bond parameters through 4 key principles: identification and use of proceeds, a clear process for evaluation of eligible products, reporting, management of proceeds, and reporting on deployment of proceeds. It is possible to assign the same approach to conventional green and social impact as on Sharia-compliant products. Despite engagement with global standard setting and best practice organizations, initial focus within the Islamic finance industry has been more closely aligned to the national agenda. Malaysia was the first country to adopt SRI guidelines in August 2014. As you will know, the Securities Commission launched the Sustainable and Responsible Investment Framework to establish guidelines integrating Islamic finance and ESG as Malaysia sought to carve out a niche in Sharia-compliant ESG space. Within it, the SRI Sukuk framework was aligned with ICMA's GBP and formed in partnership with the World Bank. This followed in June 2015 with an issue by Malaysia's sovereign wealth fund Khazanah Nasional Berhad of the first social impact in June 2015, raising $1 million 1 billion ringgit, or USD 266 million, dedicated to educational products. Also in Malaysia, where the green agenda is a high priority, Tadao Energy incorporated social responsibility in its investment mandate, and in June 2016 issued the world's first ever green sukuk. The success of the Malaysian sustainability framework has been supported with a variety of incentives to promote sustainable asset classes. This is something to be immensely proud of. Commentary published at the end of CIMB Holdings suggested that sovereigns would issue between 3 and 5 global sukuk in 2018, a percentage of those as green sukuk. We are not quite there yet, but all indications are that Malaysia will continue with measures to retain its position as a leader and influence in the Asian region. At the Regional Conference on Climate Change in KL in September 2019, His Excellency the Governor of Bank Negara of Malaysia cited the regional haze from burning forests as a reminder of the environmental challenges faced. Recognizing the implications for financial stability, His Excellency the Governor commented that Bank Negara was giving serious attention to climate risk and announced new reporting requirements for financial institutions following final classification of green assets by the Securities Commission and the World Bank. Expecting to issue the first draft of the classification for industry consultation imminently, His Excellency the Governor confirmed that information and data collected will be processed by Bank Negara to consider changes to prudential standards to better reflect risks from climate-related exposure. Now, since 2014, the UN Development Program has supported the government of Indonesia to build the best enabling environment for innovative financial and debt instruments, to promote green financing and investment, as well as enhance the nation's sustainability. Sharia-compliant financing has been part of that dialogue. The issuance of 1.2 billion green sukuk with a 5-year tenor took place in February 2018, whereupon Indonesia became the first Asian sovereign to issue a green bond of any type. Bankers involved with the transaction reported remarkable demand, enabling pricing to be tightened by the issuer. The issuance was the first to take place under the Republic's Green Bond and Green Sukuk framework, which is aligned to ICMA's Green Bond principles and the Green Bond standards announced in November 2017. The sovereign influence was significant and far-reaching, and Indonesia returned to the Green Sukuk market in February 19 with a $2 billion issuance. Prospectively, these transactions offer a blueprint for the $26 trillion USD infrastructure requirement for Asia, based on estimates of the Asian Development Bank, where green finance and green sukuk are expected to be an important conduit to meet some of these funding needs. Now, kind of moving across the globe, in the UAE, and particularly Dubai, a top-down approach is evident with the signing of an MOU to combine resources and share knowledge and awareness on Greek sukuk development by the Dubai Islamic Economy Development Center, the Dubai International Financial Center, and the Dubai Financial Market and Climate Bonds Initiative. The DIEDC commented the MOU is intended to develop standards of certification for green sukuk using the climate bond standards and the certification scheme. A working group will also focus on ESG integration, cultivating the issuance of green financial instruments, as well as encouraging responsible long-term investment for diversity, inclusion, and sustainable future. Now, the UAE did publish their sustainability guidelines last week, and we look forward to seeing more from that region. In May 19, UAE conglomerate Majid Al Futtaim issued a $600 million green sukuk with a tenor of 10 years. Proceeds will be deployed to finance and refinance the corporate's existing future green projects, encompassing green buildings, renewable energy, sustainable water management, and energy efficiency. This was the first green sukuk issued by a MENA corporate and the world's first benchmark green sukuk. Second-party opinion by Sustainalytics, use of proceeds, project selection, proceeds management, and reporting show that it's in line with global standards. So the Climate Bonds Initiative is an international investor-focused nonprofit, an organization which is solely working on mobilizing the 100 trillion bond market for climate change solutions, and it was a first mover in 2009. The 2019 numbers, actually, these figures are incorrect because they've just reissued the new 2019 numbers. So reaching the estimated for the 2019 green bond issuance, which was estimated between 230 and 250 billion, has actually come out close to 255 billion, so far exceeding the top estimate. The labeled green bonds aligned with have actually come in over 200 billion. So we're seeing greater issuance than we've even expected. but we're still far away from the $1 trillion mark that we're expecting. Green bonds in green Sukuk have demonstrated best-in-class characteristics by deployment of proceeds to financing that address climate change and environmental concerns, and all of Malaysia's green Sukuk reference the Securities Commission's SRI framework. So let's go through. So in a recent survey covering HSBC, covering 500 institutional investors and 500 issuers, it was found that nearly 2/3 of the UAE Sukuk and bond issues were expecting to relocate capital to financing projects over their next 5 issuances. Almost half of investors reported they will start to invest in green instruments within 2 years, and a quarter said they will increase their current level of green investments, showing that this is going to be an area that we're going to see more activity. Although issues investors across the Middle East and Asia report broad awareness of the importance of environmental and social impact financing, a lack of environmental, social, and governance data comparability, as well as shortage of qualified human resources, were cited as negatively impact the growth of green Sukuk. So there is interest out there, and there will be growth, but we need to create the building blocks for that to come forward. This evolving national and regional infrastructure is important as green bonds and Sukuk move into the mainstream. Environmental and social sustainability reaching a global stage requires consideration of cultural imperatives worldwide, as well as regulatory and legal differences. Let's move forward. So in parallel to what's in the UAE, in parallel to the Securities Commission endeavors to the capital markets framework, Bank Negara, the central bank, has focused on enhancing the role and impact of its Islamic banks. In 2017, Bank Negara published a strategic paper, as everyone knows, a VBI, proposing strategies for Islamic banks to support development of sustainable finance ecosystem and formed a practical collaboration with 5 Islamic banks. Amongst their initiatives, HSBC Amana issued the world's first Sukuk focusing on financing and delivery against the objectives of the UN SDGs, issued an amount of 500 million ringgit in September 2018. The transaction is reflective of the bank's commitment to financing products that benefit communities and is consistent with its stated intention to help finance global sustainable development by providing $100 billion in sustainable financing and investment by 2025. The UNDP has highlighted the issue as a prime example of how to create innovative financing for the goals and marks a milestone in aligning Islamic finance with the SDGs. Bank Negara published a discussion paper on its proposed tax green economy framework in late 2019, which is a fantastic step to try to bring both the conventional and the Sharia and the Islamic finance community in Malaysia towards a more sustainable business. Oops. Okay, so the 17 SDGs came into effect in January 2016 and are part of the UN's 2030 agenda. They address social and economic development issues, and they will guide the United Nations Development Program and Policy through 2030, and they some 170 countries and territories. As stated by the UNDP, achieving the SDGs requires the partnership of governments, private sector, civil society, and citizens alike to make sure the planet is a better place for future generations. The General Council for Islamic Banks and Financial Institutions, SABAFI, focused its 2019 Global Islamic Bankers Survey on societal development and issues. Part of the report was focused on the UN SDGs, where Islamic banks were asked to rank, through a series of questions, the importance of each of the 17 goals, both as part of their strategic business development and in terms of importance of enabling them to deliver against the objects of Sharia. As a banking survey, the focus was restricted and excluded the role of Islamic capital markets and Sukuk in delivering against the objective of the SDGs. However, as a report, it gives one of the most expansive illustrations of how SABAFI members, an important group of over 100 Islamic banks, understand the SDGs. The SDGs target and how they, as banks, are working out their individual and collective roles in delivering against those objectives. The results taken from 100, where are we? The results taken from 106 banks in 36 countries were illuminating. Regional priorities are quite diverse and unsurprisingly reflect regional preoccupation. SABAFI concluded that Islamic banks were well attuned to the objectives of Sharia and also those of the SDGs. However, many saw another pillar of compliance or relevant to the funds allocated to charitable giving or corporate social responsibility. Currently, the missing element, says Sabafi, is the full integration of the SDGs with the overarching objectives of the Sharia so that they can be better embedded within the overall business and activities of the bank. However, certain banks were targeting that integration and viewed themselves as businesses that were defined by social purpose and responsibility. The global outcomes showed that for these bank respondents, goals related to the economic growth and development are most important in terms of promoting SDGs within business plans. Thereafter come the individual goals such as Goal 4, quality education, and Goal 1, no poverty. At the bottom of the importance ranking were the goals linked to climate, natural environment, and biodiversity, which one must ask surely reflects the need for more evolved national and regional policy formation if they're coming at the bottom of the survey. Leading the engagement between Islamic finance and the global SRI community moving forward. So how do we join the dots? How do we raise awareness, make connections, implement policy, and develop best practice characteristics? Amongst challenges for a financial sector, which is frequently critical of its own perceived lack of standardization, it has been interesting to explore points of prospective collaboration, overlap of convergence, and other financial industry subsets striving to set standards, obtain consensus, and develop commonality of investment approach to streamline practices. There are relatively recent examples of thought leadership emanating from the Islamic finance marketplace that promote engagement with the wider ethical financial communities. In terms of banking and finance, we can look to IDB, the Islamic Development Bank, and co-chairs the Intergovernmental Committee of Experts on Sustainable Development. We also have the RFI Foundation, which works to link the Islamic finance sector with other forms of responsible and sustainable investment. And then the UN itself, the UN Environmental Program Finance Initiative, is a partnership of 240 financial institutions to promote sustainable finance, which is also working with the RFI. And in September 2019, the UNEP FI Principles of Responsive Banking were launched, which allows for the participation not only by banks themselves, but also by companies such as DDCAP to be endorser stakeholders who work with the banking community and help to promote those standards and those principles. Now, another UN affiliate organization is the Principles for Responsible Investment. The PRI is the world's leading proponent of responsible investment and works to understand the investment implications of environmental, social, and government factors. Established in 2006, the UNEPFI and the UN Global Compact have over 2,600 signatories. 310 of them are service providers like DDCAP. In fact, in November 2016, DDCAP became a signatory, and it was the first intermediary service provider in the Islamic finance space to become a signatory, and we still are the only one of our type to be a signatory. Now, the Principles of Responsive Banking, as I discussed previously, were launched in 2019 during the UN General Assembly by 130 banks from 49 countries. Signatories represented more than $47 billion in assets. As society's expectations change, banks must be transparent and clear about how their products and services create value for customers, clients, investors, and society, and the PRB aims to help that. The RFI Foundation, mentioned previously, works with the Islamic finance sector as well as other responsible and sustainable initiatives to try to merge the two together. The RFI Foundation will focus on catalyzing better market action around findings that show that 97% of Middle East investors and 90% of issuers see environmental and social issues are important. 94% of Middle Eastern issuers see ESG-focused financing as interesting or very interesting, and 49% of Middle East investors will buy green or social impact bonds within 2 years. So there is the data across the Islamic finance and sector, and of course across the financial sector generally, that there is interest and there is appetite. But as we discussed, there are other building blocks that need to come into play before we can actually meet that investor appetite. The advent of Sharia-compliant, green, and impact-focused instruments has already resonated with international markets, as we have seen. One of the is the Vaccine Alliance. Through its treasury manager, the World Bank, the International Finance Facility for Immunization issued its inaugural $500 million sukuk in late 2014. The purpose was to accelerate funding available for immunization and health systems in developing countries through Gavi, like the Vaccine Alliance. Established in 2006, IFFIM has 9 sovereign donors and benefits from $6.5 billion in donor contributions. The UK government is the largest, having pledged 1.6 billion sterling, which consists of 46% of total pledges, over a 23-year period. Oversubscribed and listed on the London Stock Exchange, this was the first benchmark-sized sukuk primarily focused on social impact and the largest inaugural sukuk offered by a supranational. IFFIM returned to the global capital market in 2015 with a $200 million sukuk, and in April 2019 established a private placement of $50 million with the Islamic Development Bank Group. So social impact bonds. They were first pioneered in UK in 2010 to help prevent reoffending prisoners. Structures provide investment approaches to resolve social issues. Investors are reimbursed rather than it being a pure donation. And the reimbursement is on the basis of project managers' performance against agreed targets. Investors may lose part of their investment if the targets are not met. The largest number of social impact bonds have been issued in the UK, over 100 being issued since 2010. Increasingly, proceeds are deployed internationally, with investors ranging from philanthropists to governments. Data as at the end of December 2018 estimates between 300 and 400 million has been raised since 2010. Now, the International Federation of the Red Cross and Red Crescent, One Wash program, is seeking to issue an impact sukuk to help with hygiene across the developing world. The ISDB and the IFC have signed an MOU to jointly develop this innovative approach that will blend development finance, humanitarian aid, and private capital. The objective contributes not only to sustainable goal for clean water, but also clean health and well-being, gender equality, partnership for girls, and supports the Global Task Force for Cholera Control. Because, of course, with poor hygiene issues are instrumental in creating gender inequality because they unequally impact women and girls. The successful conclusion of One Wash will be a powerful illustration of Islamic financial practitioners' focus on the Maqasid al-Sharia, offering a transactional template for very significant impact-focused contribution that we, as a socially conscious and innovative part of the global financial system, are positioned to make. Since the success in issuing sukuk to the Gavi Alliance, our industry has developed further templates to support blending of private sector funding with public sector or multilateral grants or donations. In 2016, for example, the ISDB and its development partners launched a 2.5 billion Lives and Livelihood Fund, the largest development initiative of its kind in the Middle East. In a period extending from the launch to 2020, the LLF will provide up to 2.5 billion of concessional financing aimed at saving and improving lives. The ISDB issued a debut 1 billion euro green sukuk in November 19, targeting investor diversification. Now, extending the Islamic investors' impact, looking at zakat and waqf. A pilot project in one of Kenya's poorest districts showed potential impact of Sharia-compliant investment. The Kenyan drought in 2017 resulted in emergency relief needed for 2.7 million people. The IFRC and the Kenya Red Cross raised aid for water access, food, and healthcare. An approach was made to the Zakat Council in the state of Perlis in Malaysia to co-invest. Sustainable zakat was allocated by the council, to the county of Kitui in Kenya, which was used to repair boreholes, install new water pumps, and provide livelihood opportunities for locals. The green gram seeds were purchased and distributed to 175,000 family farms. Sales of grain generated profits at project, and farmers reallocated the initial zakat monies to neighboring county in Kenya. So they felt such gratitude to what had been done that rather than they actually were able to repay the charity that was given to them to help a neighboring county. The UN Refugees Agency Refugee Zakat Fund, another example of a social impact, released over 38 million in the first half of 2019. The Waqf Core Principles, a joint initiative between the Indonesian government and the ISDB, established methodology to ensure waqf, or endowments, are directed to satisfy public needs and assets and are managed efficiently, and the Waqf Cash Sukuk have been developed. So in conclusion, the SDGs will not be achieved without effective social infrastructure for delivery. Sources of conventional institutional funding do not have sufficient capacity to meet demand. And the position is further challenged by emerging economies or those where financial markets remain underdeveloped and donor aid is no longer bridging the gap. Impact is building, but acceleration is surely dependent on all of us working together. Examples of benchmark impact sukuk like those in Malaysia, Indonesia, and the Gavi sukuk have been few to date, but the financing investment templates are there, and it means they can be used by governments, by charities, and by corporates. Today, we also have just a few illustrations of the impact, of course, and high-profile sector undertakings could deliver. They are of critical importance in motivating the availability of institutional and private capital. Let's see. So what has DDCAP done? We've talked about the global landscape. The 17, as we mentioned, the 17 SDGs came into effect in January of 2016 and set targets to address social and economic development. And as we noted, if they're going to succeed, we each need to play a role. And through our business and our social and our services, our corporate infrastructure and policies, and our social responsibility program, DDCAP strongly identifies with the targets and objectives set and is working in support of international initiatives to achieve them. And the 4 SDGs that we are working with are quality education, gender equality, industry, innovation, infrastructure, and partnerships for the goals. Now we look and we use those SDGs not only to focus on our philanthropic and our corporate social responsibility, but also on looking at sustainability and responsibility in our commercial activities. DDCAP aspires to connect the global Islamic finance marketplace responsibly and supports awareness of the business and ethical case for responsible finance. We recognize that organizations and firms across our industry are working to translate their own vision into responsible and sustainable policies and procedures that produce positive social and environmental outcomes as delivering financial results. Our commitment to SRA is a daily commitment, and it's something that we are trying to integrate at all levels of the company, all levels of the business, and of course, both inside and outside our sphere. So what have we done? As we've mentioned, through our commitment, we have been building Ethos AFP for over a decade, and as mentioned, we were one of the first signatories to the PRI. In a parallel initiative, DDCAP is also a member of the Responsible Finance Foundation, as I discussed, which brings together the Islamic finance and sustainable finance. And our esteemed leader, Stella Cox, CBE, is on the board of trustees of our foundation, and I myself am an emissary. We're also a signatory to CEDIT, which is an initiative that hopes to take the sustainability data and responsible finance data and publish it so that it's publicly available to all, so that banks who make commitments banks and financial institutions who make a commitment to sustainability, you see what they've committed to and how they've actually performed against that. Some of our sustainable responsible actions. We nominated a senior executive to the inaugural cohort of Leader Tomorrow who's been working with the Lord Mayor. And that initiative is, after the financial crisis, they did a health check in the United Kingdom for the respect of the financial services industry and found that the trust in the financial services was an all-time low. So the Lord Mayor has taken a three-pronged approach to look at students, leaders of tomorrow, and current leaders to try to reinstate trust within the financial industry by going at 3 levels of society. In 2019, DDCAP was a sponsor of the RFI Summit in Abu Dhabi, and we're supporting the Support Disruption for Good Challenge, where we look at different fintech and other startups that are doing things to support the SDGs, and each year there are different SDGs that are focused on, and then the winner of that challenge receives financial backing. DDCAP Group has also recently produced a template case study. This is what happens when you read. Last night, we launched our executive summary of our case study that we've been working on since November of 2018, and we will formally launch that through the RFI Foundation in February, in the middle of next month. And case study is what has been our journey as an SME, looking at how to become more sustainable and more responsible when you're a small to medium enterprise, and the impact that you can make when you're an intermediary. For corporate responsible response, as I said, our SRA program has 2 parts. One is looking at commercial issues, and the other is our corporate social responsibility. And in our CSR program, we focus on 3 main charities in the UK. The Prince's Trust, which aims to promote education and give young people the skills they need to succeed. City Giving Day, which is a Lord Mayor's initiative supporting his 3 charities, and the Tim Parry Jonathan Ball Peace Foundation, which helps to promote nonviolent resolution to conflict. We also support Women I, which is part of the Women Empowerment Program by the Cambridge IFA to highlight enormously important roles that exceptionally talented women, such as your wonderful head, are playing in Islamic business and finance. Professor Human Dar is the founder of Women I. To quote, "Our Women I program is a small contribution to the global movement to make the world an equitable place to live." So that was quoting Dr. Safisa Azmi, CEO of Cambridge IFA. A large number of successful and influential women in Islamic finance participated in the 2019 Women I program from Europe, Central Asia, China, the Middle East, South Asia, and the ASEAN region. At the event, 300 women were acknowledged, and of course, ranked number 1, as I mentioned just a few moments ago, was your Datuk Nuriba Kamso, the head of Bank Rakyat. So in 2017, Stella, our managing director, was ranked number 1 in the top 10 women in Islamic banking and finance, and was ranked number 1 in the Women I 100 most influential women in Islamic finance. In 2019, Stella was appointed patron of chief of Women I. And from that role, she can help to promote women. She hopes to work with other women in Islamic finance to promote and pave the role for other women to move forward. As a consequence of Stella's membership of and contribution to the nomination committee for the Royal Award for Islamic Finance in 2018, Women of Will has received a donation with the kind permission of the Malaysian authorities. As you may know, Women of Will is a non-profit organization listed on the Social Impact Exchange. It is overseen by Agensi Inovasi Malaysia, which plays a crucial role in matching fundraisers and companies with social purpose organizations to collaborate towards materializing initiatives with positive social impact. So also for gender equality, DDCAP recently became a signatory to Her Majesty Treasury Women in Finance Charter. The Women in Finance Charter aims to promote diversity across the financial services, which is still lacking women at very high levels. And so every signature to the charter commits within a year to publish their diversity goals on their website, and a year later has to publish their achievement post those goals, both if they meet those goals and if they fail. So we will be posting our goals in September of 2020 and reporting against them in September of 2021. While we do have great diversity at DDCAP, our managing director is female, 5 out of 10 associate directors are women, our head of corporate responsibility, our head of HR, and our head of client relations are women. We still feel there is more to be done in certain areas of the industry, in certain areas of our company, and we hope to be making those changes. So we are also committed to fintech, because we believe technology is going to be changing things of what we are going to do, and Islamic fintech particularly. So we have recently made some investments. We are looking at Islamic fintech and halal economy, and we believe that there's a bright future for what's going to be happening. We're inspired by fintech through our development of our own Ethos AFP, and we look for other enabling technologies. Again, as I mentioned, ESFP is DCAP's multi-award-winning Sharia-compliant financial services technology, and it is something that helps with our best practices by creating a seamless and automated, or seamless technological platform that can enable the market to connect through itself 24 hours a day, 7 days a week. As we mentioned previously, Ethos encompasses Sharia and business-focused operational requirements across treasury, capital markets, asset management, consumer banking, and insurers. Now it provides a sophisticated range of features to both wholesale and retail transactional requirements, and it also allows us not only to choose what commodity we wish to use and which brands of commodity we wish to use, but also it can be tailored to support the sustainable and sustainable policies of our clients, depending on what commodity and geographic locations they do or do not wish to use. We are also looking at creating partnerships through Refinitiv, which will help to create a seamless business chain for our clients. We will invest in other Islamic fintech, not just enabling it. And as I said, alluded to a few slides ago, in October 2019, Islamic Markets Limited, the world's leading market intelligence provider for Islamic finance and commercial markets, closed a strategic funding round with DDCAP. And as well as an investment, we are also a signatories to something in the UK called Future.now. And the UK recognizes that 1 in 12 do not have the necessary digital skills to survive or to thrive in the economy. And so Future.now aims to bring digital skills to all of those across the country. And so I thank you very much for your time and for accepting me in place of Stella. It's been an absolute pleasure, and I thank you very much for your time.